Hello everyone, welcome to the IchimokuCharts.com hourly analysis for the Aussie dollar, US dollar FX for Tuesday, January the 11th, 2010. Well, an interesting market and a fairly bearish market at the moment, the Aussie dollar. And we can see here that the market is forming a congestion area. Now this looks fairly similar to a symmetrical triangle, but it's not quite. We have this little bit of congestion here at the left-hand edge of what looks like the triangle, but still it should be treated as some sort of a pattern, and what we should be looking for is a breakout from this pattern. And we have a previous downtrend in place and this consolidation, and we have the bulls accepting lower prices. That's why the market is making lower peaks within the pattern, but the bears are accepting higher prices within the pattern as well. That's what creates the higher troughs. So what we have is the two sides converging to a price, and there will come a price where the market will be out of balance, and we will have a breakout in either side. All of those orders that are coming down from the that are trading lower from the bulls and then higher from the bears will be exhausted, and that will cause the breakout. Now, if the breakout is to the upside, we do have resistance offered overhead from the cloud, so we do need to be aware that if there is a breakout to the upside, we do have limited potential up to probably around 99.30 or so. Only fairly thin cloud, so there is a possibility that if it's a strong breakout that it actually could break that, because the cloud is thin. To the downside, though, we don't have any decent until we trade down to around 97.52, which is a fair way away. So any breakout to the downside could be quite significant. Now, there is some support down here at this swing low at roughly 98.20, so that will be important if there is that breakout to the downside. Now, overall, though, the market is trading below the cloud, so the market has an overall negative bias, and the market's still trading down below the Kijun-sen, which means that the market is bearish in the medium-term time frame on the hourly charts, but slightly bullish in the short-term time frame because the market's trading up above the Tenkan-sen. Now, as we can see, as the market's been trading within the congestion area, it's been oscillating above and below the Tenkan-sen, and that's exactly what you'd expect as a market's going sideways. So a very crucial time for this market over the next few hours or so. If we look to the breakout to the upside or the downside, there are some very important areas that the market will interact with. Now, if we just pan out, we can't see a lot of detail in this chart, but we actually can see the Ichimoku cloud, and this is very important about to show how the cloud acts as an indicator of the trend in the market. And we can see here that the market broke out to the upside above the cloud and stayed above that cloud for quite some time and traded all the way up to 102 from roughly 99 cents. The market found support at the cloud, bounced off it several times, and then we had the breakout to the downside through a fairly thin area of the cloud and a very substantial downtrend from roughly 101.8 and now trading down to around 98.5 roughly. So we can see here how the Ichimoku cloud is a very good big picture indicator of the trend in the market. We can see here as the market was trending down how it interacted with the cloud and found resistance on the way up. So that's what we'd expect to see here. If the market interacts with the cloud to the upside, then we should look to that holding as resistance. But remember what we've said earlier, that the cloud is fairly thin in this area, and it will take less petrol in the tank from the market to actually break out to the upside. If we do see a breakout to the upside on a bullish candle, then there might be a good chance that the market will rally and perhaps test $1 again. We do need to be patient and wait for an indication for any breakout from this type of triangle congestion area.